All right, guys, welcome to Trader Tuesdays. Today, I don't feel like much of a trader. I feel like I don't know. I guess actually, you know what? Today, maybe I feel more like a trader than than I have in a while. What's up, Kevin, Renault, Jack, David, Mike, Daryl? What's up, Daryl? How you doing, buddy? Yeah, coming to you live from the corner of my deck. This time, I mean, look, I'm in Tennessee, and it's either hot or cold here. I mean, I know it's actually kind of temperate, but fall weather. The leaves aren't changing yet, but you can see there's a nice little breeze. It's probably like 72 degrees. It's just I got the denim back out. This is my favorite shirt. Y'all probably see me wear this shirt too much. I do own more than one shirt, but I like this one. What's up, Rosie, Joe, Victor, Matt? Yeah, I'm good. I didn't go on tilt today. I think people kind of took that I went nuts. I wasn't on tilt. It wasn't, I wasn't violating any risk rules. It was all good. It was just I just I just feel like I did everything wrong. Um you guys know the cycles that my trading goes through. I kind of oscillate a little bit between like a super high level of discretion, and then I get to the point where I screw it up, and then I have to really revert back to like process. That's kind of like some cycles that I go through. Now, I believe that I operate at my highest levels at that more, and I don't even like this word, but I'll say it, intuitive, discretionary state. But guys, believe me, I am grounded in process. I am grounded in many years of developing NADRO methodology, and exactly that's what I'm doing all the time. You guys can see that every day. But um I allow myself to bend a lot more rules, right? There's no You can design any quantitative system out there, and there are times where if you would have broken this rule, it would work. And if you would not have broken this rule there, it would, you know what I mean? So I allow myself to kind of operate like as a system, but a very discretionary one. So, anyways, I think we all oscillate. The reason I bring this up is because I think we all oscillate to a certain extent on on different spectrums as traders. I think it's really important, right? So one that I've often talked about is confidence. My confidence is not shot right now just because I had a bad session. Um, but it could be at some point, and I know yours is at some point as well. I talk about this all the time with students. Be aware that you are going to oscillate between, let's say, overconfident all the way to underconfident, and sometimes you're going to be right in the middle where I think is ideal. You're going to oscillate on all kinds of spectrums, especially with things related to kind of mental framework psychology. um you're going to oscillate based on, even the conditions that we're operating in, such as volatility. It oscillates, right? I know we've had a prolonged period of high vol, but things dried up there about what, 2 months ago. Things got a little quiet for just a little bit or something. But in general, since 2020, volatility's been pretty high in my opinion. Anyways, I just wanted to cover that and talk about, you're gonna oscillate, you're gonna have these highs and lows, but your goal is always to find that middle, right? Stay balanced. It's kind of like a yoga concept, right? Come back to that middle. All right, let's get to your questions. I will take them on the Q&A box. So click Q&A to submit your questions. I take them on a first come, first serve basis. Let's hop into it. I don't have charts in front of me, so if you guys ask some very market charts specific stuff, I can't answer those today. Sorry. Flaggy IPB versus strong IPB on long-term VWAP, mostly monthly, weekly. Should I consider incorporating into my process the way a pullback on the long-term VWAP is behaving? If it's strong, I might still be rotational. Flaggy, I'm not sure if it's imbalanced. It's a good question. So really, I'm going to rephrase the question. Merritt, should I consider the price action as a NADRO trader? Should I consider the price action of how a particular potential entry point or potential trade sets up? It's a great question. I think that yes, it's good to, but no. And here's almost, I just got up an AGM call. We're starting up a brand new September advanced group mentoring. Just got off a call. And one of the things we talked about that we're going to really, some of them, the more advanced students are going to hone in on is their own niche, right? Their own specialized way of going about as a NADRO trader, which is really just a big collection of frameworks, right? NADRO doesn't say everybody that's ever taken NADRO is going to buy at 11:36 and 54 seconds and sell at 12:15 and 22 seconds. That's not NADRO, right? NADRO tells you, okay, here's a contextual top-down view that you arrive at with your ranking and distilling in a discretionary process. And then how do you want to go about executing on those trades? What markets, what time frames? So we're not all trading the same, even though we speak the same language. It's a beautiful thing. Anyways, some of you can make the choice to allow how a pullback sets up. Let's say it's an extreme fade on a monthly chart and you get your intraday setup. Whether or not that move on that monthly time frame is flaggy or rocketing up into an area to potentially short could make a difference. It could make a huge difference for some of you. It could make very little or no difference for some of you. And so I sound like I'm talking out of both sides of my mouth here and not actually giving an answer, but I really do stand by. There's not a tremendous amount of edge in a lot of those price action patterns, in my opinion. And that's coming from somebody who used to purely trade price action. So I think that that the current market condition, the narrative, the confluence, aka the strength of the narrative across multiple time frames, all that stuff really sets up and is super, super important, way more important than whether it's a bear flag or whether it's a spike up into an area. That is what really, really matters. So that's my definitive answer, is to say the price action patterns don't matter as much. But for some of you, you really want to may want to incorporate it. I love flags. I think it's a sign of weakness in terms of momentum. It certainly is. So that can add that little extra emphasis. Here's a really good answer. Maybe for some of you, and I think I fall into this camp, if I was on the fence about the overall narrative picture, right? It's kind of like, well, it's kind of like a B or C trade. It's not really A or A plus, and it's not really like an F, like I'm not going to take it at all. If that's the case, maybe a nice little bear flag on the monthly with a little excess spike into the high of that is a trade I just can't pass up, right? It's almost like we use order flow often as like a tiebreaker for an idea. So I think that's a really comprehensive answer to your question there. All right. Doru says, I want to clarify something about absorption just to make sure I understand it correctly. When an absorption happens and we have the squeeze, does the tape reset after the squeeze stop run had place and can be used normally again? Let me reread this and think about it. I want to clarify. So once the absorption happens and we have the squeeze, does the tape reset? I think the answer is yes. I think that, heck, even without the squeeze, okay, let's say you get a couple rotations and there was no squeeze, right, following a strong absorption, I think the tape does reset. Okay, I think that's really important. Where you begin to gauge what order flow does from that point forward, you need to kind of reset rather than allowing the dislocation between price and delta, which was caused by the absorption, to just continue persisting and carrying forward forever. So I think that's a pretty advanced question, and I hope that that answer makes sense. Jared says, how would you interpret CVD? I'm guessing that's Delta, pushing higher since Friday while the market pushes lower. We've talked about this a lot, Jared. Markets are becoming more and more passively driven as of late. Is that a trend that's just going to persist forever? I have no idea. Is that currently the trend that we're seeing in markets? Yes, it is. So that's what's happening. If you have a market that is trending lower while Delta is not heading lower with it, that's because the market is more passively driven. You have strong limit order sells, which are dominating the overall auction process. The market's moving away from those without necessarily having people slamming bids. And in fact, they may be lifting more offers, but those offers are so strong that we can't eat through them. Therefore, price goes lower. So it's just, it is what it is, right? But I think it's important to recognize trends and dynamics and how things change over time. And that's certainly what we've seen, at least in US indices in terms of order flow. We're seeing more passive activity than we used to a year ago, even. Jacob says, hi, Merritt. How many trades do you usually have per day? Do you enter the trade all at once or do you scale in and then scale out? Thank you. I generally have on a normal, I mean, average is nothing, right? On some days, I'll have 30 trades a day. On some days, I'll have 1 trade a day, right? So if I told you I averaged 12 trades a day, which I think is kind of my average, it doesn't really mean anything because I don't come out every day and trade and make 12 trades. So I think it's really important that we differentiate that beyond. I think a lot of times that people overuse what's the average of this. Guess what? The average doesn't matter. So anyways, I think it's really important that you take a look at, is there opportunity or is there not? Is there really high opportunity? Are you scalping a lot of intraday momentum? You're going to have more trades. Are the narratives really setting up and playing out really well, which we haven't seen lately? If that's the case, you want to get in perhaps early in the session, maybe after a stop run, something like that, maybe off an opening drive, and you hold it for the duration of the session, right? Or you wait for a test of a key line in the sand, you see a shift in the tape, you see a shift in momentum, market goes rotational, boom, you slam an extreme fade and you crush the day into a big target. We haven't seen as much of that lately. The market has been in a mode where it's been whipsaw. There's been volatility, but not a lot of movement, right? A lot of whipsawing, a lot of like, you know, people know I've been in swing trade long, the S&P, I've been up 100 points, I've been up 200 points. They've come back and stopped me out. And I'm fine with that. It was the right play. I certainly scaled out of those trades along the way, but the core positions haven't been working out lately. My desk knows this. The desk, we haven't been crushing big narrative ideas, you know, the past couple months, because markets just simply haven't been offering them or at least following through on them. So we're kind of in a mode where we're more kind of like trying to hit singles and doubles, really trying to kind of take profits a little bit quicker right now. And that's certainly working. How do you see inside candle setups, Merritt, or do you trade them, say, on a larger time frame, such as 30 to 60 minutes? Like literally like one candle and then you have an inside bar. Is that what you're asking about? If you could answer that in the chat, please. Yeah. That's trivial and insignificant to me. It's not something I keep up with. Of course, if I'm looking at a chart, I'm analyzing like momentum or buyers pushing price higher or sellers pushing price lower, or are we going nowhere? And I'm aware when we're going nowhere, but that's not necessarily something that like is very relevant to me. Now, if you want to talk about value, it's a little B. If you want to talk about value, as I get stung, value and value migration or lack thereof, that's huge. That's a huge deal. So that's something like in terms of inside bars and in terms of value, I'm all over that. That's a big deal. It's going to frame context for me. Jack says, what would you tell someone who's consistently profitable but ends up sitting on their hands when up a dollar amount for the day? Return, they miss trades since they don't want to give it back. I feel like this is what's holding me back from reaching another level. Jack, my brother from another mother, I can't tell you how this plagued me for years. I'm a very risk-seeking person. I like taking risks. I have no problem. In fact, it's a flaw in trading, right? I would take too much risk. I have too much confidence. I go for things when I should lay off. However, when I get up a decent amount of money, when I get up a decent amount of R, my nature is to go, here we are talking about a spectrum, right? Where are we on the spectrum of risk aversion, and how are we oscillating? How can we get ourselves back to the middle? What a perfect roundabout conversation we've had here. I would go from risk seeking to risk averse when I got up on the session. So the key is to, in my mind, not make it so much about your psychology, but make your process stronger than your psychology, right? I always say my process is a better trader than I am. My process is a better trader than I am. And it's true. When I feel scared and risk averse and I'm looking at my P&L and I don't want to give it back, but I know, and I know that I know there's a great opportunity at hand, my process needs to win there, right? My process is a better trader than I am, because I'm subject to various emotions and flaws. So it's really important that you get to that point with a process. So don't focus on the P&L throughout the session. Obviously, we're going to glance at it. We need to know if we're about at daily loss limit. We need to know, we're going to know kind of what our P&L is in general. Even if you're not really keeping up with it, you're keeping up with kind of your R values. Well, you know what your R value is. You just multiply it by, what you're doing, and you know what your P&L is. So it's really important that you identify, is this an overall type of environment, maybe higher volatility, where there's rampant opportunity, there's a lot of opportunity, or is there not much opportunity and I'm forcing things? That needs to tell you when or not you need to stop. For example, me, I stopped today, right? I wasn't making good decisions. So I was like, done, right? So it really depends on the opportunity sets and what we're working with. All right, we have we got time here. Let's keep going. So again, I'm answering your psychology question with a process answer. And I think a lot of times that's the best answer to give, right? Anonymous attendee asks, hey, I'm new here. I came across your website recently. I want to be a prop desk trader like you one day, but it's a long journey. Can you please guide a noob like me? Thank you. How many hours do we have? You want to look at our website. So I started a prop desk, and I started a path for people literally to get to the prop desk, from nuts and bolts education through, are you ready, in my opinion, to potentially join the prop desk? We have an entire path that's laid out for you there, except for the very, very basics, right? If you don't know what a bid and an ask is, if you don't know what a candle or stick is, just Google around and go read, a dozen books like we all do to start learning what trading is, right? But from there, apterostrading.com, I've answered you with the path that I've laid out to get there. Yeah, someone says, just a suggestion, please do share your journey as a trader. We'd love to hear your journey. Go check out some of the podcasts I've done. If you want to hear me talk about it for a couple hours, literally, go check out podcasts I did with Alpha Mind. Go check out podcasts I did with Anthony Credelli. I have really laid out my journey in detail, and we don't have time to on this format here. Matt says, 2 days max loss in a row, getting just wicked out of my best risk reward opportunities, but having a hard time re-entering as price moves away from my area quickly. My stops are based on MGI. During this time of higher vol, do you push that stop a little further than you normally would? I typically don't. There are times, I won't get into it, where I will even scale into a position and really give myself a lot of room on things. But that's really, really rare. So I'm not going to focus on that. Go look at the tweet I made yesterday into the close, where you can see me getting wicked out at the lows. I was looking for a stop run into the close yesterday in NASDAQ, and I was getting stopped out on these nasty, it's quarter end week here, guys, nasty little flushes. But what was I doing, guys? Put it in the chat. What was I doing? What was I doing well? Keeping losses small. That's correct. Not the answer I was looking for, but I was absolutely keeping my risk where it should be. And there we go. We get some kind of answers here, right? Scaling in and out. Really, the word I'm looking for here is re-entry. I was re-entering, which is what Matt asked about. I think the art of the re-entry, as I put in that tweet, is a book waiting to be written by me. I think that short-term traders, you cannot avoid nasty randomness. You cannot avoid getting wicked. If you're managing risk and you're amplifying risk reward and timing your trades with tighter stops, aka amplifying risk reward on the upside, you're subjecting yourself to noise. You're subjecting, especially the lower time frames you go, right? So it's common. It needs to be more common knowledge that you will get wicked, that it's just part of doing business. And if you stand aside, you let the wick take place, and you begin to identify and build a skill set around identifying order flow of what a wick looks like versus what a fresh imbalance and trending type move with energy behind it looks and feels like, that is how you differentiate between, do I re-enter now that we've stabilized and started to turn, or do I stay out? That's what the art of the re-entry is all about. And that's what being a short-term trader it necessitates, in my mind. Maybe if you guys ever find someone out there who doesn't require re-entries and also makes, big risk reward on some trades, let me know, because I'd love to meet them. I'd love to pick their brain. I'd love to get them to trade for Apteros. I think all short-term traders have to deal with stop outs. My time on other prop desks and whatnot, I saw this time and time again. Huge winners. A lot of times they would initially get stopped. There'd be a beautiful reentry because they were pro enough, experienced enough to know the difference between, that was a stop run. Hey, you caught me there. Boom, I'm back in. What do you got now? Punk, right? That's how it needs to be. All right, one more question. Josh says, "Hi, Merritt. I know it might be unfamiliar to you recently, but do you have any practical suggestions on dealing with a losing streak?" Hey, I have losing streaks just like anybody else, for sure. My swing trade account was losing in August. Lost money on in that account in August, trying to find the bottom of US indices, right? Had some beautiful trades, and ultimately too many stop outs didn't work out. So I lose just like anyone else. But a losing streak, right? AKA, let's call it what it is. It's a drawdown, right? And let's call it a substantial drawdown. How do we handle substantial drawdowns? Well, we need to get to the bottom of we need to get to the root cause. What's going on here? Is our strategy not working because we're making errors on the execution side, on the reads, whatever it is? Or are we executing really well and it's not really our fault? The market hasn't been conducive. Have we been forcing too many things? Have we been missing some of the best opportunities, which ultimately cost us? As most of us know, you put together a really good track record, a lot of the bulk of your P&L is going to come from a very few handful of trades at the end of the day, right? People don't realize that. You have to grind to be there for when those really nice trades work. That happens on a monthly basis. That happens on a yearly basis. It's just, the math in all CPTs I've ever seen that kind of data on, it kind of works out that way. Not that I'm saying you just hit one home run a year and that's how you make your year. It's not that, right? But out of, 2,000 trades for the year, 55 of them were just huge winners that made up the bulk of your P&L for the year at the end of the day, right? And everything else was like a wash, right? That's what I'm talking about. And what's the word? I digress. Practical suggestions, we're dealing with the losing streak. Find out what the problem is. Understand that you have to grind through periods like that. Is the market changing? Am I screwing up? What's going on? You got to get to the problem there. And if you can't figure it out, you got to take your foot off the gas first and foremost. If you can't, even if you do figure it out and you can't stop making certain errors, for example, you got to take your foot off the pedal. You can't try harder. You can't push harder. You can't keep focusing on, okay, how many S&P points at the current size that I trade am I down, right? Okay, I need to make back 56 points. Hopefully I can make 56 points in the next 2 days. All right, 56 divided by 2 is, what is that? 28. I'll make 28 points over the next 2 days and I'll recover from this drawdown. Don't do that math. Don't put yourself in that psychological headspace. Get down to nuts and bolts. Have some good process goals. Take your foot off the gas if need be, and start building one foot in front of the other, one at a time, and start putting up some good work. Focus on the things that you can control. Focus on figuring out what the problem was that led you to this, and begin as a higher level, a more experienced level, begin to understand your normal ebbs and flows of drawdowns, because guess what? Most traders spend most of their time in a drawdown, right? It's only occasionally we hit that fresh equity high, and then you draw down for 5 trades, and then you make a, equity high, whatever. So understand the normalcy of your drawdowns, what a normal one looks like, that you really shouldn't give two craps about, right? And then understand where things are different, where there's a threshold that's crossed, where your performance is really struggling more than a normal drawdown. And that's where you need to really do some hard, honest assessment of whether it's your fault or the market's, and how you're going to adjust and how you're going to move forward. And don't reinvent the wheel. Don't come up with like, oh, I'm just going to go find the next education and change, how you trade, if you've been consistently profitable leading up to that. If you haven't, maybe you don't have an edge yet. A lot of people don't want to admit that. They think they have an edge. They don't have an edge. They're lying to themselves. They're deceiving. It's kind of sad, but a lot of people think they can trade and they really can't. And they spend decades thinking that. So don't be that person. Anyways, I hope some of these helpfuls have been a question to you today. Always great questions from this crew. Really appreciate you guys. And let's come back and get them tomorrow, huh? What do you say? Cheers.